Welcome back to the Daily Crypto Roundup. Today we're breaking down a market that's holding steady on the surface but facing some important pressure points underneath. We'll look at how Bitcoin and Ethereum are trading as macro uncertainty builds, why political noise around central banks is feeding into crypto sentiment, and what a large XRP trade could be signaling about potential rotation into altcoins. We'll also cover upcoming token unlocks that could impact supply, fresh exchange activity around stablecoin infrastructure, renewed discussion around older chains like Ethereum Classic, and where the top 10 coins are sitting right now. This isn't a hype-driven session. It's about understanding, positioning, risk, and what traders are actually watching as we move into the next few days. Before we get into where the major coins are trading today, a quick word on the XRP giveaway. We're continuing to run these as part of the show, and the way to get involved is straightforward. Stay engaged, drop your thoughts in the comments, and take part in the discussion around the daily stories. We keep an eye on consistent engagement across episodes when selecting future winners, so even on days with no announcement, commenting and interacting still matters. With that in mind, let's take a look at how the top coins are actually performing right now. Bitcoin is around $91,100, holding near key support as markets digest mixed signals. Ethereum is trading near $3,110, reflecting range-bound behavior. XRP sits around $2.09, showing relative strength in an otherwise cautious environment. BNB is close to $880 to $900, Solana around $140, and Cardano near 40 cents. Dogecoin is trading around 14 cents, Tron is near 30 cents, Polygon is roughly 15 cents, and Avalanche is around $13.87. These readings show a market that's steady but undecided, with major assets holding their ranges rather than breaking sharply in either direction, a theme that's consistent with today's broader price action. Bitcoin has spent much of the day hovering around the $90,000 area, briefly pushing higher before settling back into a narrow range. Despite ongoing geopolitical tension and persistent political noise around central banks, price action has remained controlled. That stability is notable, particularly given the volume of macro headlines circulating. Rather than breaking down under pressure, Bitcoin has held key levels, suggesting that buyers are still willing to defend support, even as uncertainty builds. Ethereum has shown a similar pattern, trading within a well-defined range near the low $3,000 region. There's been no decisive move in either direction, reinforcing the sense that markets are pausing rather than positioning aggressively. This kind of sideways action often reflects hesitation, as traders wait for confirmation from macro data, regulatory developments, or shifts in broader risk sentiment. One of the key narratives influencing markets today has been political tension involving the U.S. Federal Reserve. Reports surrounding investigations, criticism, and pressure on the Fed have weighed on the U.S. dollar at points, which in turn has provided some support for Bitcoin. Crypto continues to show sensitivity to dollar strength and weakness, particularly when political developments raise questions about monetary policy independence and future rate decisions. In environments like this, Bitcoin often behaves less like a speculative asset and more like a neutral alternative, even if only temporarily. Beyond Bitcoin and Ethereum, attention has turned toward potential rotation into altcoins. One of the standout moments today was a large XRP trade, roughly $23 million executed in a very short time window, which some traders are interpreting as an early signal that capital may be probing opportunities beyond Bitcoin. Historically, these kinds of large, fast trades tend to attract attention because they can precede broader shifts in market leadership, especially when markets are otherwise quiet. That said, the picture around XRP remains mixed. While spot activity has drawn interest, some derivative markets show signs of weakness, suggesting that not all participants are convinced this move marks the start of a sustained trend. This contrast highlights the cautious tone across the market. Traders are testing ideas, but they're not committing fully yet. Analysts looking at that large XRP transaction have been careful not to jump to conclusions about intent, because at this stage, there's no confirmed public identification of the seller. On-chain data shows the movement came from a long-standing wallet rather than an exchange hot wallet, which suggests this was more likely a whale-level holder or institutional entity repositioning, rather than retail panic selling. Some analysts believe the timing points to liquidity management rather than outright bearishness, with the transaction potentially representing an OTC-style distribution, internal rebalancing, or a hedge against short-term macro risk, rather than a directional bet against XRP itself. Importantly, there was no immediate cascade of follow-through selling after the trade, which weakens the argument that this was a signal of broad capitulation. Instead, the market absorbed the flow relatively cleanly. That has led several commentators to frame the move less as a warning sign and more as a stress test of liquidity, showing that XRP can handle large blocks without collapsing. Until more wallet attribution or follow-up behavior becomes clear, most analysts are treating this as a contextual data point rather than a definitive bearish signal. Notable, but not yet decisive. Another key unlock event traders are watching this week comes from the Arbitrum ecosystem. Arbitrum's governance token, the token operates on a structured vesting schedule that was put in place from launch to prevent early insiders and contributors from immediately flooding the market with supply. Most tokens were originally locked to align early investors, core contributors, and the DAO treasury with the network's long-term roadmap, rather than short-term price action. After an initial one-year cliff, those tokens began unlocking on a scheduled basis. The next significant unlock is due around mid-January, with roughly 92 million Arbitrum tokens set to be released, representing just under 2% of the current circulating supply. These tokens come primarily from allocations reserved for the Arbitrum ecosystem development, meaning they are intended to fund grants, partnerships, and operational costs rather than being automatically sold on the open market. That said, analysts still pay close attention to events like this, because even modest increases in available supply can influence short-term sentiment. In quieter or more cautious markets, traders often price in the possibility of distribution rather than waiting to see if selling actually occurs. The key point is that this unlock isn't a surprise or a change in policy. It's a planned release baked into Arbitrum's tokenomics from the start. But it does add another layer of supply-side pressure that markets need to absorb in the near term. Macro data expectations continue to loom large. Upcoming U.S. inflation figures and jobs data later this week are firmly on traders' radar. These releases will shape expectations around interest rates and liquidity, which remain some of the most important drivers of crypto prices in this cycle. Until those numbers are known, hesitation is likely to persist, with markets reluctant to commit to a clear direction. Elsewhere in the market, broader price snapshots show selective strength rather than uniform movement. Bitcoin remains steady near $90,000, Ethereum is holding its range, and some faster-moving assets like Solana have seen sharper percentage gains. This uneven performance suggests that capital is being deployed carefully, rather than flooding the market indiscriminately, reinforcing the idea that this is a selective, not euphoric phase. We also saw fresh exchange-side developments today, with Binance announcing the listing of United Stables, including new spot trading pairs against both USDT and USDC. While new listings are common, stablecoin-related launches tend to draw particular attention because they directly affect liquidity and settlement flows, rather than pure speculation. The introduction of zero-fee trading pairs suggests an effort to encourage volume and adoption quickly. And this fits a broader trend we've been seeing, where exchanges are competing not just on new assets, but on stablecoin efficiency, routing, and depth, infrastructure rather than hype. Institutional context continues to develop quietly in the background. While there were no major new filings today, traditional finance interest in crypto products remains an ongoing theme. Banks and asset managers continue to explore or expand crypto-linked offerings as regulatory frameworks evolve. This slow, methodical involvement doesn't tend to drive day-to-day price action, but it does shape the longer-term structure of the market. There has also been renewed discussion today around Ethereum Classic, with longer-term analysis resurfacing around the original Ethereum chain. Ethereum Classic rarely dominates daily headlines, but it often reappears during periods when markets reassess fundamentals and history rather than momentum. As the immutability-focused version of Ethereum, it continues to attract a niche group of supporters who value its philosophical stance, even as most development has moved elsewhere. The renewed attention doesn't necessarily signal a trend. but it does reflect a broader habit of revisiting older chains during quieter phases of the market. Analyst commentary circulating today has added to the broader narrative as well. Some long-term forecasts continue to point to strong potential for Ethereum tied to infrastructure usage and on-chain activity, while others caution that near-term price action remains far more sensitive to macro conditions than internal crypto catalysts. That balance between long-term optimism and short-term caution is very much reflected in today's price behavior. Taken together, today's headlines paint a picture of a market that is steady but undecided. Bitcoin and Ethereum are holding key levels. Altcoin interest is emerging but uneven, and traders are balancing political noise, macro data risk, regulatory uncertainty, and supply-side considerations like token unlocks. There's no clear directional consensus yet, and that in itself is telling. For now, markets appear content to wait. That's where we'll leave it for today's Daily Crypto Roundup. Drop your thoughts in the comments, smash like, follow for the next update, and we will see you at the top.